Good morning from our global headquarters in New York. I'm Menace Cranny alongside Danny Berger. You welcome to Bloomberg Brief. Let's set your agenda.
An $80 billion boost to market cap for Tesla after a blowout quarter for margins and guidance. Bid rejected. Boeing fails to reach a deal with its factory workers, keeping the union on strike. And in a dead heat, candidates Harris and Trump are neck and neck in the latest polls with just 12 days to go until the election. Good morning, Manus.
Danny, good morning. It looks like a little bit of earnings optimism has taken some sand out of the gearbox. Excuse the pun. Tesla flying higher, up by 11% this morning. So the angst of these markets over the past 3 days of a sell-off has just turned around incrementally, up 0.4% on the S&P 500. It was the mega Mag 7, which was actually anxious yesterday going into the close. Tesla delivered. NVIDIA ended the day down by 3%, and that's turning it around. Is there a sense of exhaustion, perhaps, in some of these markets? The bond market is where you've seen perhaps the most exercise on the upside. Two's up by 47 basis points, as we said yesterday, from the jumbo rate cut by the Fed. And I like what Ed Yardeni said. The bond vigilantes, they started to vote early, Danny. Bonds have lost 2%. You like that one? Lost 2% in the month of October. Good morning.
Good morning. It is this push and pull between what matters more for this market. Is it earnings? Is it the election? Is it the macro? It seems to be everything at once, which is why it's so difficult to disentangle these moves. But Bank of America said that there is this election volatility premium being priced in, and that's why stocks are drifting lower. And
then you look back, I mean, you've got all this euphoria about soft landing, grease landing, no landing, and then you look at the beige book and it's like a blancmange that's sort of gone flat. Not that I've ever cooked a blancmange, but a blancmange is literally, little changed in most of the areas in the United States of America.
It does stand in contrast to some of the stronger economic data we've gotten. We know the Fed is caring more about that anecdotal evidence. Well, Manus, over the past few days, as we've been talking about, it's been a story of higher yields, stocks weaker. Let me just show you what we've done over the past week. Again, just emphasizing what you were just talking about. Joining us now is Nadia Grant, head of global equities at BNP Paribas. Nadia, theoretically, higher yields are supposed to pressure equities. How sensitive is this market to fiscal stories, to stories of stronger growth, which means higher yields? Do equities finally succumb to that?
Hi, and lovely to see you. So sorry, yes, in terms of the market dynamics right now, we're really entering the thick of earnings season. So I think the market is finally going to be far more susceptible to the intrinsic news, to all of the nice idiosyncratic, and so we're really keen to understand where the growth is going, particularly given where multiples are right now in the market, and so it's all the more important to see that earnings delivery on the S&P 500 to support the market further. So that's really what we are watching right now and what we think should drive this month.
Nadia, good morning to you. We had Julian Emmanuel sitting in the seat yesterday, and he talked about this ferocity of the move higher in yields, and that really those higher yielding Mag 7 don't really get challenged until two-year paper goes above 415. How much of a headwind is this spike in yields to the overall Mag 7 narrative?
I think what you've seen, and particularly what you saw earlier in the year, is when the market entered the year thinking about cuts in rates far more aggressively than what the Fed had guided for. What you saw is the Mag 7 leading the market and continuing to lead the market from the past year. And so they've really sort of not ignored the rise in yield that you saw at the time, but it was far more about the fundamentals. It was far more about the growth, about the secular trends within AI, and that propelled the market, and the huge earnings delivery that you saw in part of NVIDIA in particular, and others that really propelled those stocks. So I don't think that as it pertains to the Mag 7, that higher yields are per se a big issue, because they are exposed to this secular mega trend. And so as long as they can continue to deliver on the earnings front, on the free cash flow delivery, and these are fantastic companies, because it's not that they're trading at a very high multiple for nothing. They also have extremely high return on equities and very nice free cash flow yield. So you're paid in the present to own these companies.
Just to put a finer point on it, Nadia, does that mean you believe that their leadership will continue unchallenged next year?
It's a great question. I do buy into the broadening theme, but I'm not throwing away the Mag 7 as a result of that. And so what it means is that I do believe that as the economy is well underpinned, as earnings growth should broaden, and the gap between the sectors that earn and technology earnings growth should reduce, should narrow a lot. I do believe that you should see a broadening of, as you see that gap narrowing, as you see more sector contributing to the earnings growth of the S&P, you should see a broadening. As well, the Fed easing should further contribute to that, as it alleviates a lot of pressure on the earnings of those companies that are more interest rate sensitive. So I do buy into that, but it doesn't say it doesn't mean that I should abandon the great secular growth characteristics that I have in some of these Mag 7. So what we've done is more find a bit more balance and reduce some of our overweight into the Mag 7 and allocate it towards the sort of the belly of the market cap, the sort of 10 to 50 billion market cap is where we feel that you should have a bit of a relief. And likewise, you know, we think that from a market leadership standpoint, what you've seen this year is you still have seen a lot of cyclical leading defensive. So we also like having a bit of exposure to those sectors that have been neglected by the market, that look very cheap. So you can get cheap protection from some of the defensive sectors as well. So the likes of the staples and utilities that trade within the sort of 6% of the cheapest they've been in their history relative to the market. So really, from a portfolio standpoint, we like to have many drivers of performance.
Nadia, we're going to spend a little bit of time talking about the very latest Bloomberg poll, which shows neck and neck in the swing states for Trump versus Harris as we count down to this election. None of these polls are indicating red sweep, blue sweep, or anything definitive. I want to get a sense from you. You talk about neutrality or as balanced as possible going into this election. What is a balanced position going into this election for you?
Yeah, it's really tricky, isn't it? Because the policies, the agendas are so vastly different and very different sectors that would benefit as a result. So what we've done in terms of, because we obviously have no hedge in trying to call the outcome of this election, as you say, it's very much neck and neck. So what we're trying to do in portfolio is really finding opportunities that we think are bipartisan in nature, that can benefit from both agenda. And so you have things like IIJA, the Infrastructure Act, or the CHIPS Act, that are very much bipartisan. And when you think about, from a secular standpoint, the rise in geopolitical risk and all of the protectionist measures that have been announced, or those that are already in place, you can see that the theme of onshoring and reshoring and building in America, building at home, is a very strong theme. And so we've been leaning into that sort of a renaissance or rise in construction spending in the US, and very much like exposure to sort of aggregate and cement, because it shouldn't be swayed away by one versus the other.
Certainly those tax differentials are going to play and come to bear. Harris at 28%, Trump at 20% of corporate tax, and if you build in America or produce in America, it's going to be 15% if they manage to drive the tax policy through. Nadia, thank you so much for being with us this morning. Nadia Grant of BNP Paribas. Other stories trending on your Bloomberg terminal this morning. Barclays jumped to the highest level since 2015. That's after it reported a surprise increase in the third quarter fixed income trading and total income that beat the estimates. The bank also benefited from an increase in deal activity in the quarter, with advisory revenue more than doubling.
Hermes sales rose more than 11%. The Birkin bag maker met resilient demand for its pricey handbags. Its performance has managed to hold up despite the luxury slowdown. Its most loyal customers are still splurging on the most expensive products.
And Tesla delivered a blowout quarter, reporting its biggest profit in more than a year. An upbeat forecast for 2025. On the earnings call, Elon Musk promised to make the EV company the most valuable company in the world, starting with a 20 to 30% delivery growth for next year.
Speaking of which, we are going to be catching up with RBC's Tom Narayan, really one of the lead voices on Tesla, on their earnings later this hour.
And locked in a dead heat, as we've just said, with less than 2 weeks to run until the election. The race between Vice President Harris and former President Trump couldn't be tighter. We discussed the latest polls on Bloomberg Brief. Context matters.
Day one of the Trump administration, I will terminate Kamala's insane electric vehicle mandate, and we will end the Green New scam once and for all.
Presidential campaign, it's heating up as we inch closer to the election. The former President Trump there taking a jab at Vice President Harris's policy at his Georgia rally last night. This as Harris takes aim at her opponent in a CNN town hall.
General Milley calling Donald Trump a fascist. You yourself have not used that word to describe him. Let me ask you tonight, do you think Donald Trump is a fascist?
Yes, I do. Yes, I do. And I also believe that the people who know him best on this subject should be trusted.
So it's less than 2 weeks before Election Day. Candidates trying to do everything they can to move the needle for undecided voters and to get people out and showing up to vote. Joining us now is Bloomberg's David Gura. David, I just want to touch on what Harris was talking about, because this is different than when she first started her campaign. It was one of real positivity. It seems that her tone has changed, akin to Biden saying this man isn't fit for office.
Yeah, she's increasingly leaning into the fact that she thinks he's erratic and unfit to serve. And what she was commenting on there are these two articles that came out this week, one in the New York Times, one in the Atlantic, both of which were quoting liberally John Kelly, who is Donald Trump's chief of staff, former four-star general, former secretary of the Department of Homeland Security, really expressing strong reservations about Donald Trump being reelected once again, and he in those interviews calling Donald Trump a fascist. So this was the strongest language we've heard from her since, using that term. I should say Donald Trump very comfortable calling her a communist and applying all kinds of labels to her. But I think it's a moment in which she's trying to, again, raise the stakes for voters who might be on the fence about going to vote, perhaps Republicans who don't feel comfortable supporting Donald Trump, and really couching this as kind of an existential threat to the country.
It's interesting, you know, she calls him unstable, unfit to serve, and then you look at his Georgia narrative yesterday, which I watched when I was at home yesterday afternoon, and it was very much around the reaching out to the minorities, and it really was leaning into the Latino vote, leaning into the whole sort of area that they spent last week on. So what was Georgia's incredibly important as well. He spent a lot of time in North Carolina, which is critically important, but Georgia also very important with early voting as well.
Absolutely, in a state in which he's doing very well. If you look at the latest poll that we have from Bloomberg and Morning Consult, he's leading by a very slim margin in North Carolina, in Georgia, and Wisconsin as well. He's very hopeful that he's going to win that state.
I mean, he won Georgia, in 2016 by nearly 6%.
He did. And so now you have it being a very contested state. You have Kamala Harris going there today. She's going to do a rally with former President Obama and Bruce Springsteen. So both candidates really fighting for that state. But you bring up early voting. This is something that both candidates are really leaning into. And in the past, it's something that you saw Democrats really pushing and trying to get voters to use. Now you're seeing Republicans and Donald Trump doing it just as effectively. And I mean, the turnout in North Carolina, for instance, or the amount of people availing themselves of early voting, more than 1 million people doing that in the first 4 days of that period. So it's becoming very popular, and one that I think both parties are leaning into.
You mentioned the poll, the Morning Consult Bloomberg poll, that's in a dead heat. Elsewhere, there does seem to be polling that suggests ever so slight, but momentum for Trump. There was an FT Michigan poll that we talked about this morning, that they trust him more on the economy than Harris for the first time. There was also a Wall Street Journal post that said views have turned more negative on Harris. We talked so much about that big bump that she got when she took over from Biden, the momentum there. Has that finally faded?
You know, I think that that's what her campaign fears the most. But if you look at our polling kind of in complement with that, you know, you see the economy as that kind of like top line number. It's been the thing that voters care about the most, and by such a wide margin. Beneath it are immigration and abortion rights. Look, he is trying to just kind of stay the course, maintain the momentum that he's got. And as you say, she had that bump after she was named the nominee and after the convention. We've seen that ebb somewhat so, but fundamentally this is such a razor-thin margin when you look at our polling, within a margin of error 49% each. It's just extraordinary. And so I hate to say it's more of the same, but it's just kind of confirming the fact that this is such a close race. And again, we're just looking at these 7 swing states.
Yeah, and indeed, and in that one, it is still the economy where he has a clear lead, 50% to Harris's 45%. Who do you trust more with your personal finances? Again, it's a Republican administration. Look, he's going on Joe Rogan. He's doing this podcast. He's going to be at Madison Square Gardens. She's going to work with Bruce Springsteen. I mean, they're sort of going after the last gasp of attention. What do you make of the strategy in the next 10 days?
I think that there's been a shift from going after this very small sliver of the electorate, these undecided voters. Will they turn out? Who knows? Again, it's very small. I think that the real focus now is on ginning up excitement and getting people to come to the polls. So it's those who might be on the fence, sitting on the couch, might not mail in their ballot or go to the polls on election day. So the infusion here of celebrity, of going on to this blockbuster podcast, the Joe Rogan podcast, which has such a sizable audience, I think is an effort to reintroduce themselves to audiences of people who, again, might be on the fence but would be willing to come in and vote.
What is it? Nearly 25 million people have done early voting, but the Democrats aren't leading as much as they did in the last time out. It's going to be an exciting 10 days. David, thank you very much. David Gura there with the very latest on the polls. Coming up on the show, we'll dig into Boeing getting hit pre-market. This is after the workers rejected the latest wage offer. Context matters on Bloomberg. Bloomberg Brief. I'm Manus Craney alongside Danny Berger in New York. Front pages look a little bit like this. Headlines from around the world. We're going to kick off with the New York Times, leading that the editorial chief of Los Angeles Times is quitting after it refused to endorse Vice President Kamala Harris. Now, the board had planned to endorse her, but stopped by the owner.
Next up on the Bloomberg, UBS's CEO, Sergio Armati, said that his firm is starting to think about what comes next after the merger with Credit Suisse. It's been so much time focusing on this. Armati looking forward, saying that technological changes will have a big impact on where they go from here.
And the Journal leads with Boeing's largest union rejecting the new labor deal. Workers voted 64% against a new labor agreement and will extend the 6-week strike. Let's just dig a little bit more into this story. We've got Bloomberg Opening Trade co-anchor Guy Johnson with us. Guy, it's interesting. I mean, this is a blow, certainly a blow to Kelly Ortberg, but it looks like the margin of rejection has been compressed, but it's a bloody nose nonetheless.
It's still a difficult outcome for the management at Boeing. They were hoping that they could get this strike over and done with. But as you say, Manus, we come down from 94% voting against the deal to 64% voting against the deal. So that's a significant improvement. The union has, or the union's members have rejected a 35% pay offer. What is critical here, though, is what is happening with the pension. Many of those that work at Boeing would like to see the defined benefit pension scheme being brought back, and that seems to be the clear sticking point right now. So Boeing's got to go back to the negotiating table with its unions. It would like to get this over and done with quite quickly, so it'll be interesting to see over the next few days whether or not we can see another deal being put to the workers that maybe resolves that pension issue.
Guy, does the fact it was 64% voting against it versus the 90 whatever, does that suggest that we are just days away from an agreement?
It certainly would seem to suggest, Danny, that we are getting closer to an agreement, but the pension is clearly a major sticking point. Otherwise, I suspect the Boeing would have put it on the table a little bit earlier on. And it is key that it is clear that it is key to many workers. So this is a sticking point that a solution could be difficult to find on. So we'll maybe have to take some time to get this done. Remember, it took the acting Labour Secretary to maybe get to where we are now. How much more involvement do we need to see from Washington, D.C. to get this across the line? But the pension issue is going to be difficult. That may suggest that it may take some time to get resolved. But this is something that Boeing needs to get done quickly. So maybe it's time that everybody put their cards on the table and thrashed out a deal.
Yeah, I mean, on the defined benefit pension, this is where they've offered some money to the 401k. But again, that point of angst is on the defined pension. Guy, how much of a sword of Damocles is this rejection over Ortberg in terms of the cash burn and the junk the deliberation by the rating agencies? I want to be careful with that in terms of moving to junk.
Well, they're watching the situation very, very carefully. We had anticipated, it had been anticipated that Boeing maybe would start to get back to being cash flow positive fairly quickly. It would take a while, but this is now being pushed back into further out into 2025. This is the critical factor. We're still scratching our heads trying to understand exactly why it would take so long to get things back to normal, to get this company back on a more even keel. But Kelly Ortberg said it yesterday, it's easier to turn things off than to turn things back on again. And that is a crucial line. As soon as we maybe get a deal done, it's not like you can kind of flip the switch and Boeing goes back to where it was before. The whole supply chain needs to ramp back up again. You need to see the Boeing factories ramping back up again. This will be a process that takes time, and maybe that's why it could take a while for this company to get back to being cash flow positive once again. And as you say, the rating agency will be watching very carefully to see, the rating agencies will be watching very carefully to see how that process unfolds.
Guy, thank you so much. Bloomberg's Guy Johnson. We'll have you back shortly, and we'll get to some of the other American earnings, American Airlines, that is, in Southwest. Guy Johnson there. Man, as a quick look at markets this morning. Is it earnings come to save the day? S&P 500 futures up nearly 0.5%.
Well, it was 3 days of angst, wasn't it?
Yeah.
You know, and there was this sort of juxtaposition between the rise in yields, and there's a lovely piece this morning about what scale of a change in yields does it take to really unseat an equity rally. I don't do standard deviations, well, not since 1989, but apparently it's a 2 standard deviation move in the bond market.
The problem with that, though, is we had higher rates and Mag 7 still did well in this Fed hiking cycle. So,
yeah. I mean, look, the swings in Nvidia, what was it, down 4% yesterday at one juncture,
so
swings higher this morning. Anyway, we're going to count down to this election. A little bit more on the docket. Excuse the pump.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
An $80 billion boost to the market cap for Tesla after a blowout quarter for margins and guidance. Bid rejected. Boeing fails to reach a deal with its factory workers, keeping the union on strike. In a dead heat, candidates Harris and Trump are neck and neck in the latest poll with just 12 days to go until the election. And we've had a break a trend in these markets, Danny.
We have. It was 3 days of losses, futures indicating that we will have a day of gains. Is it Tesla come to save the market? The NASDAQ 100 outperforms Tesla, up nearly 11% pre-market. Meanwhile, the bond market also backs off some of the losses that it's seen over the past few days. We're at a moment, 10-year yields down 5 basis points, where the most hawkish rate path is priced in since the summer turmoil. Yesterday, it was 10 years up 3.8 basis points. We also had a soft 20-year auction. So we give that back. So a bit of reprieve this morning, Manus.
Yeah, I mean, look, this bond market repricing has been quite vicious. It comes down to whether you believe it's fully pricing a soft landing in this market. But my favorite line, I'll say it again, it goes to Ed Yardeni. Bond vigilantes started voting early. The question is, are they done?
There's a lot of differing opinions about this. Steve Englander says that what we've seen in the bond market was just about the strong NFPs we've gotten. That is just about recalibrating where this economy is. FX market, he argues, that is about the Trump trade, but he thinks the logical conclusion is that yields could go higher if there's a Trump presidency and a red sweep.
I think you could probably call that a bit of a parabolic move, if that is what comes to pass. And the very man to discuss that is David Woo, CEO of David Woo Unbound. This is a global forum devoted to promoting fact-based debates. David previously worked as the global head of FX and rates over at Bank of America. David, good morning to you. The bond market is debating fiscal largesse and soft landing. You're looking at the political outcomes. The Bloomberg poll this morning says it's a dead heat in the swing states. You're pretty convinced that Trump is going to take the White House. Why? And what's your betting on that?
Yeah, I mean, thanks for having me. Yeah, I think there's a 75% chance I think Trump is going to win, on November 5th. And let me tell you why. First of all, as we all know, pollsters have gotten the last 2 elections completely wrong. In fact, polling errors were even bigger in 2020. Compared to 2016. Now, this is the reason why I tend to focus only on pollsters that have a good track record. If you look at the last 2 presidential elections, Trafalgar Group and Insider Advantage have by far the best track record in terms of being more predictive, especially among the battleground states. And both of these pollsters currently have Trump ahead by about 2 points in North Carolina, and Georgia, Pennsylvania, and Michigan. Of course, Trump, if he wins only 3 of these 4 states, basically the election is a lock. But there's also more to that. If you think about the key demographic groups, Trump is doing a lot better among blacks and Latinos compared to how you basically did in 2020. Interesting. There are a lot of black people in Georgia, and there are a lot of Latinos in Arizona. Moreover, Trump actually is currently leading Harris by 13 points among white females without a college degree. And guess what? There are a lot of those in Michigan and Pennsylvania. So whether you look at momentum, you look at the most accurate pollsters, you're looking at the demographic groups, all of which will suggest that the momentum is very much with Trump this time around.
David, what about down ballot Senate and congressional races? Because for this market, that matters hugely, inability to get policy through. Do you want to price in at this moment the most extreme, the most whatever have you of Trump policies and assume that the red sweep is also going to happen?
Yeah. I think the red sweep is likely to happen. I give it a 50% chance. I think the Senate is an easy call, right? I mean, the Republicans are leading in West Virginia, in Montana. If they keep Texas, Cruz keep the seats, they have 51 seats in the Senate, which will be enough, by the way, to confirm all the Trump appointees once, basically his administration's up and running. Now, I think the House race is less clear because House race, is all over the place, honestly. But I would say this, which is that you have to go back to 1984 to see a situation where the Republicans won the presidency and the Senate and lost the House. So I think from that point of view, what I'm saying is that the probability, if Trump wins, the Republicans win the Senate and the Republicans somehow lose the House, I don't quite believe that. Now, so from that point of view, I think the sweep is a very good chance. Now, as you said, right now, the market is starting to get into this sweep, basically, mode. And this is why, we've seen inflation break-evens going up, gold prices going up over the last 3 weeks. I mean, all the inflation-linked assets are going through the roof because people think Trump and clean sweep is going to lead to higher inflation. The only question I would basically disagree with, I don't think that should be taken for granted.
Look, the thesis that you put forward there, David, is in part reflected in these markets, partly by fiscal largesse and partly by the risk of stagflation and a Fed that would have to either pause or reverse. Can you combine that narrative? Let's deal with the bond market first of all. Two's dropped 47 basis points since the jumbo cut. 2016, yields spiked by 100 basis points. So we've traveled a great deal of angst so far in the dollar, in the bonds, and in the gold market.
Exactly. Now, I would say this is what's going on. I think it's a combination. Obviously, I thought it was a big mistake for the Fed to have cut 50. So I think what the market is doing, has been doing the last few weeks, simply unwinding, that mistake, so to speak. And I think even the Fed probably would admit if they knew what they know now, they probably would have done 25. But be that as it may. But I think, the biggest part of the move in the bond market and rates is the inflation break even as opposed to real yields. What it's telling me is that the market is thinking that Trump is more likely than they thought basically a month ago. And that is driving up inflation expectation because, as you said, people are thinking fiscal largesse. I happen to disagree with that view. Well, at least I don't think you can take that for granted. The bottom line is this, to me, is very simple. OK, I don't care if it's Harris or Trump. Both of them are going to be facing a deficit $2 trillion, which means that both presidential candidates will be very, very seriously fiscally constrained. In other words, in my view, Trump will have to look elsewhere if he wants to somehow basically, grow the economy. And there are two things that they've already promised, both of which is actually disinflationary. If you look at what Scott Bessent says, number one, they're going to do massive deregulations. OK, number two, they're going to massively increase oil production by 3 million barrels per day. That will basically bring up to 16 million barrels per day. Let me tell you that if that happens, oil prices are going to be in the low 40s.
Hey, David, I got to jump in because I want to squeeze this in here because we don't have much time left with you. You write that there's a 75% chance that Israel might counterattack Iran before the next U.S. election. Only about a minute here, David. But how would that shape and change everything you just told us?
Yeah, I'm sitting here in Israel. I mean, if you think about what happens, if Israel attacks Iran, I'm telling you, you're looking at an all-out war. That means lower stocks, lower rates, and higher energy price, which are exactly the opposite of the so-called Trump trades at the moment. So I would argue that over the next week, there may be even better opportunities, better levels to enter into Trump trades. I would be holding my breath.
Okay, David, we appreciate your time this morning. That is David Woo, CEO of David Woo Unbound, passionate on the results of this election to come. This is Bloomberg.
It's Bloomberg Brief. I'm Nadia Grant alongside Danny Berger here in New York. Tesla is jumping pre-market this morning after a supplies blowout quarter. Earnings were boosted by sales of the Cybertruck, which turned a profit for the first time. Elon Musk also gave an upbeat forecast for next year's numbers.
I do want to give some rough estimate, which is I think it's 20 to 30% vehicle growth next year. Notwithstanding negative external events.
Promises and timelines, things to be discussed from Elon Musk. Let's bring in our global automotive editor, Craig Tudell. Craig, you look at these numbers, Cybertruck profit for the first time, but it's what he promised to deliver in terms of cars next year that really were standout. We're up 12%, $80 billion. Is this the worst behind Tesla now?
That was at least Musk's story, and I think that's what investors clearly wanted and needed to hear in order to bid the stock back up. I think it is kind of incredible that we've gone from the stock being so driven by things like robo-taxis, things that have been perceived as probably further off, despite what Musk has been telling us for years and years. To now, looking more at the fundamentals. And I think if you do look at the fundamentals for this quarter, they were much better than expected. But this is not a company that is growing at the top line the way we were accustomed to for a long time. So this was really achieved, I think, primarily by a sort of well-run, well-operated quarter that they benefited from lower costs and sort of scaling up their newest product, the Cybertruck.
Tesla up almost 11% in the pre-market trade. Some people agree with you, Craig. Bloomberg's Craig Trudell. Let's now bring in Tom Narayan, Global Autos Analyst for RBC Capital Markets. Tom raised his price target for Tesla to $249, following the report with an outperform rating on the stock. So, Tom, you also saw some things that you liked. How surprised were you of how strong of a quarter it was?
I was very surprised. I thought we'd have a really good energy storage and regulatory credit number. What I was surprised by is the auto fundamentals. The automotive gross margin X credits was 17.1%. Consensus was expecting 14.5%. I was expecting 13.5%. And the reason why we all thought it would be so low is because they cut pricing so much to get that big volume number. I was like 8-9% pricing cuts. The reason why they got that is, as your colleague mentioned, better cost controls. There were some logistics and freight they called out, which may not benefit again next quarter. But then they said the FSD launch helped too. But underlying car costs were better. I do think some folks who are worried about Tesla now will think, okay, they got that right. Now we can actually look at those pet projects, so to speak, robo-taxis, FSD, energy storage, Optimus, so folks are more comfortable looking at those bigger picture themes.
Well, this is where maybe they'll give him a little bit more length, whether it's robo-taxi or Optimus. But when you look at this story, he didn't give any detail on the new, cheaper model, offered no details on CY25, no details on FSD, and no details on the plans for Optimus. So it's, again, high on promise, low on actual delivery and timelines, if there is a negative to be found in this.
Yeah, and I mean, this is par for the course, right? We're not going to get, heavy details on, robotaxi in my model. It's a 2040 event, right? Optimus, I think we'll get more details coming. That may actually be a closer event than even robotaxis. We did get some high-level commentary on FSD on safety. Autopilot, we know, is 10 times safer than regular cars, so we can surmise that FSD is safer too. So we got some high-level comments. I think we'll get more in time. But the bigger picture here is the car business has been kind of, is now not a concern to some folks. And we can get growth next year. I have 13% growth next year on volumes. Because of this low-priced car, they have said in the past that it'll be used on existing facilities and we'll get a low-priced car. The reason why they don't want to talk so much about it is what they call the Osborne effect, which is if everybody knows they're going to come out with a lower-priced car next year, Are we going to buy the current ones, right? So I think that's part of what's going on. We will get a lower price car next year, and that should boost demand.
Tom, I'm sure one of the stranger twists in your job is now your need to talk about politics along with Tesla. Elon Musk on the call was asked about national approval for autonomous vehicles. Let's just take a listen to his answer.
It should be possible to.
Congress, if you're listening, let's get a federal AV.
There should be a federal approval process for autonomous vehicles. It really needs to be like a national approval is important. If there's a Department of Government Efficiency, I'll try to help make that happen. And just for everyone, not just Tesla.
Yes.
Of course, a Department of Government Efficiency would be what he would run under Trump administration. Tom, to what do you understand is positive or negative if it is Trump as the next president? You have Elon Musk's ability to do this thing, but as Jordan once said, Republicans buy sneakers too. Democrats also buy EVs. How do you understand the negativity and positivity that might come with the Trump presidency?
Yeah, I mean, what we've said is basically if you look at Tesla as a stock, it benefits from the IRA, Inflation Reduction Act, which has credits for EVs, which is a Biden, bill that's passed its law now. I don't think it's going anywhere. Also, Tesla's wanted to produce in Mexico. We know that Trump wants to put tariffs there. So at face value, it would appear that, Tesla would benefit more from a Democratic administration. But then we have to look at kind of the strategy here. If you already know you're going to get all those things with the Democratic administration, perhaps it could make sense to hedge and get favor with the Trump presidency in case Trump wins. So maybe that's what's going on here. I don't know. But it would appear if you're Tesla, you would want a Democratic regime to win. On regulating robo-taxis, I'm not entirely sure why Trump administration would deregulate that. It's a state-by-state system is what we have. And I think Trump has said in the past in the press that he's not necessarily a big supporter of AVs, autonomous vehicles. So I'm not entirely sure if a Trump administration would be better for deregulating robo-taxis.
Well, there's certainly a wonderful stat. Well, Democrats are 4.5 times more likely to buy an EV. So maybe with Elon in government, the power of branding can convert the Republicans across to EV. Can we square off where we are with China? Obviously, huge competition. It looks like these price cuts are a thing of 2023 or sort of fading memory of 2024. When you look at the China policy of financing and incentive, how does that set up internal competition to Tesla? Where are we in terms of the China narrative?
Yeah, I mean, this past quarter, we've had intense competition, and Tesla actually did very well in China. I think the whole market is actually doing very well with EVs. The losers in China are the ICE companies, right? Look at what happened at GM earlier in the week. And so I actually think it's a rising tide lifts all boats. If you're selling EVs, you're going to do well in China despite the competition. Make no mistake, Tesla's going to have to cut pricing next year. That's in my model. It's in most models. But what we saw in the Q3 results is despite price cutting, they were able to sell cars profitably. So I actually think it'll be fine here next year in China. It will be competitive, but EV sales are doing very well.
OK, well, the stock, they love it this morning. We're up at 10.86% and change. Tom, thank you very much. Tom Narayan there at RBC. There are other earnings coming down the pike this morning from the airlines. American Airlines, Southwest Airlines, both will report before the market open. And investors look to their efforts to win back the corporate traveller. Guy Johnson is with us. Guy, I mean, this is a battle for the front of the bus, so to speak. There's a lot going on in this space. Just talk us through, is revenge tourism still there? Is the high-end business class being filled by us or by the corporates?
Corporate travel has never come back as strongly as we anticipated that it would post-pandemic, Manus. I don't think that's a huge surprise to anybody. I think American, which has its numbers out at 8:30 Eastern this morning, could be really interesting. Remember, American tried to basically cut out the middleman, and that didn't work out so well. And as a result of which, it's basically having to rebuild its corporate relationships, particularly in key markets, and it has struggled to do so. Its margin is lagging. It needs to get that to be picked back up again. It is lagging quite considerably, airlines like Delta. So it'll be interesting to see exactly what that margin story looks like at American a little bit later on. Southwest is going to be interesting as well. We'll see what its numbers look like. Remember, it's the bottom end of the market where we're starting to see some weakness coming in right now. And Southwest certainly is in line for maybe some pressure to come there. But Southwest also has had management issues as well. And you've got Elliott, Paul Singer certainly champing a bit the bit to see some changes. Maybe we'll get a deal announced today. There's certainly indications that we could see maybe a resolution to the proxy fight that Paul Singer has pushed through. He wants 8 seats on Southwest board. Looks like we're going to end up maybe with 3, but it is unclear at this point as what's going to happen with the CEO, Bob Jordan, and his predecessor, Gary Kelly, who is now the chairman. So 2 really interesting airline stocks out of the US a little bit later on today. And remember, Southwest, huge Boeing customer as well. It is going to be maybe suffering as a result of what is happening with the ongoing strike up in Seattle.
To that point, strike still ongoing, Guy. Despite a vote yesterday, they didn't manage to hammer out a deal. How far apart are the two sides still?
It's really hard to tell, Danny. Remember, this is a 35% increase in the pay packet that has been presented by Boeing to its unions. The unions have now rejected that. The sticking point seems to be the pension, the defined benefit pension that union workers would like to see reintroduced. They say that that was one of the critical grievances going into this process. And while there's been some additions made to the 401k program by management, they still haven't reinstated that. So the 35% pay bump is simply not enough. They want to see that happening, but that is a big move for Boeing to make. Are they prepared to do that? Are they prepared to do that quickly? While the number of people voting against this deal has dropped from 94% to 64%, the two sides are still quite far apart, and this pension issue could be quite intractable. So we'll watch and we'll see. But Boeing, ongoing problems. Kelly Ortberg was on the call yesterday. He's definitely done his research, but he's got some huge problems in front of him right now, guys.
Guy, thank you for the update. That is Bloomberg's Guy Johnson. Coming up, we're going to set you up for your trading day. More earnings on the docket. That's next on your Bloomberg Brief. It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Thursday. We're going to get earnings from UPS, Honeywell, American Airlines, and Southwest Airlines. All of that before the bell. Then some data today, 8:30 a.m. Eastern jobless claims, PMIs at 9:45, new home sales at 10 a.m. And then the Treasury will sell $24 billion of 5-year tips this afternoon after a weak 20-year auction yesterday. Manus.
Yeah, given the inflation outlook, maybe that will be gobbled up quite easily. Nvidia is up over 1%. Tough day yesterday. Jensen Huang struck a partnership with Asia's richest man, Mukesh Ambani, to build out the AI infrastructure. So we're turning it around from yesterday. IBM extends its post-earnings decline. Weak consulting sales weighing on the results, down 4.8%. And Uber down 1.88%. The shares slide alongside Lyft on Tesla's plans for ride-hailing in 2025. Musk said that the services will roll out in Texas and in California next year, pending regulatory approvals. And, of course, he talked a lot about regulation on that call yesterday evening, Danny, didn't he?
Yeah, he did. And, of course, what you're seeing there in Uber stands in contrast to what Tesla is doing this morning, up nearly 11%. Is that also what's saving NVIDIA, Manus? It was such an ugly day yesterday for the Mag 7, falling 2.15%.
Yeah, it certainly was an ugly day, but the sand got taken out of the gearboxes by Elon.
Great pun. Great pun.
That's what
a
we
note
do.
to end it on.